Hi students, in the last class we discussed on the problem on the FIFO. Okay, so what's the meaning of FIFO? First in first out means what? Okay, so this is also one of the techniques to control the stock. Okay, so now we saw one problem on that, and I hope all of you understand that problem. Okay, so one more we will take the problem on the FIFO. So see here, the following is a history of the receipts and issue of materials in a factory during February 2013. Okay, so this is the information is given. With the help of this information we have to prepare the FIFO statement. Okay, so now see, on the first Feb, opening stock 500 quintals at rupees 25. Okay, so this is the opening stock with his manufacturing factory. Okay, so this is the information. So you have to first of all draw the format. Okay, so the store ledger accounts, FIFO method, name of materials, code numbers, as well as the minimum stock level, maximum stock level, ordering quantity. Okay, all these things you have to write, and then draw the date column, GR column, receipts column. In the receipts column there are three columns: quantity, rate, amount. Okay, in the issue column, the issues column, it is how many three columns you have to draw: quantity, rate column, and the amount column. And then the balance also you have to draw the three columns: quantity column, rate column, and the amount column. Okay, so like this you have to draw the format. Okay, so now date wise we will take one by one. Okay, so now see, Feb 1 opening stock 500 quintals at rupees 25. Okay, so now in the date column just we have to put in the date column 1 February 1st February 2013. so it is the balance because it is the stock. Okay, so it's the earlier year stock. Okay, so directly stock we have to record in the balance column. Okay, so make it dash in the receipts column as well as the issue column. Okay, so in the balance 500 quantity at the rate of 25, that is the doesn't find. Okay, so first thing first, it was they will transfer. Now we have to issue to manage out the stock, we have to issue first. Okay, so the next date, just see, on 3rd February issue bills. Okay, 70 bills. Okay, so the date 3rd February 2013, it is the issue. Okay, so it's not receipts. Okay, so it is the issue. Make dash in the receipts column, dash in the amount column as well as the quantity. Okay, so in the issue columns, take it 70 issues from this 500. Okay, at the rate of 25, the rate is 25. The 70 to 25, it's on the 750. Okay, so stay 50. So maintain again rate this 500 to the 70 quantity. So it was 430 with this the 3rd February 2013. Okay, so make it 430 at the rate of 25. So amount will be 750. Okay, the next date, this year 4th February 800. Okay, again they transferred. Okay, so again they transferred. On this date again they transferred. Okay, so on 4th February 2015, how many units? 30 quintals. Okay, so what's the remaining with on this 3rd February? What's the stock remaining? So 430. Out of this 430, again they issued 100 units. Okay, so 100 at the rate of 25, the amount will be the 2500. Okay, so again on this 4th February we have to maintain the balance. Okay, so out of this 430, use the 100 units, so remaining will be the 330 units at the rate of 25. The total amount will be stock to 8250. Okay, on the next date, just see here, 8th February again issues how many units? 80 units. Okay, so on 4th February, what's the stock? 330 unit stocks. So on 8th again they issue how many units? 80 units. Okay, so from this 330, okay, so take it 80 units from this 330 units at the rate of 25, the amount will be the 2000. Okay, so now see, remaining stock is what? 250 on this 8th February. It means how it came the 250. So 330 minus 80, the remaining stock is what? 230. Okay, at the rate of 25. amount is 6,250. Okay, So on the next date, see here, 13th February, received from vendor 200 quintals at rupees 24.50. It means what? So this is the receipts. Okay, so this is the raw material taken from the vendor. Okay, 20 quintals at the rate of 24.50 on which date? 30th February. Okay, so put here date 30th February. So it's related to the receipt. So make it here 200 quantity at the rate of 24.50. The total amount is what? 4,900. Okay, so again we have to maintain on this date the balance. Okay, so the earlier stock is as it is, we have to put 250 at the rate of 25. Amount is 6,250. So on this date again they purchased 200 units at the rate of 24.50. the amount is 4,900. Okay, so in the next date, just here, refund of surplus from a work order 15 quintals at rupees 24. Okay, refund of surplus from a work order. So it means what? Whatever on this 14th February 2013. Okay, so this is the surplus. So surplus means what? Whatever they transferred, whatever they issued for the manufacturing, out of that again return some units are returned. Okay, so again it's returned in a store. So on 14th, so it is also nothing about the receipts. Okay, so 15th quantity at the rate of 24, the amount will be the 33,360. Okay, so on this 14th date again we have to maintain the balance. Okay, so the earlier 250 as it is we have to maintain, as well as on the 13th date as it is 200 we have to maintain as again. So on this 14th it is return of 15 units as it is we have to maintain. Okay, so like this, but in this verification surplus we have to write. Okay, so next in the next date, on 16th date, sorry, on the 16th, before that one statement is given. So what's that? Issues are to be placed on the principle of FIFO. The stock verification of the factory noted that on 15th February he had found a shortage of 5 quintals, and on 27th another shortage of 8 quintals. Write on the complete store's ledger account in respect of the above materials. Okay, so it means what? On 15th February it's a shortage. Shortage means what? It is a issue. Okay, so put here date on 15th February 2013. It is a shortage. Okay, it's not related to the receipts they issued. Okay, so 5 units we issued. Whatever the balance is there, it means what? On 14th the first stock is what? 250. Out of this 250, how many units shortage? 5 units shortage. Okay, at the rate of 25, the total amount will be the 125. Okay, again on this date we have to maintain the balance. Okay, 250 minus 5 remaining is what? 245, and the rate of 25 the amount is what? 6,125. Okay, so in the stock verification you have to write the shortage. Okay, so this 200 stock, 15 stock as it is we have to maintain on the next date also. Okay, so now see on 15th it is maintained. So again see on 16th what happened? Issues 180 quintals. Okay, 180 quintals. Okay, so now see here on 16th whatever the stocks on 15th. Okay, whatever the stock, there are 3 stocks are there. Okay, first stock is what? 245, second stock is 200, first stock last one is what? 15 units. Okay, so first stock FIFO we have to use the FIFO method. Okay, first stock first in first out. Okay, so now again we have to issue from this first stock. Okay, how many quintals? 180 quintals. Okay, so take it on 16th February 180 quintals at the rate of 20. The price is 6,125. Okay, so again we have to maintain the stock on the 16th February. So 245 minus 180 remaining is 65. Okay, again first stock is remaining. So 65 at the rate of 25, the amount will be the 1,625. Okay, so again this whatever the next stock is there, again we have to maintain as it is on this date also. Okay, so now the next date on 20th received from vendor 240 quintals at rupees 24.375. Okay, so take received from vendor means it is the purchased. Okay, so factory purchased how many quintals? 240 quintals from the vendor. Okay, on 20th February. Okay, so now see here on 20th February. So again it's the receipts 240 units at the rate of 24.375. The amount is what? 5,8 50. Okay, so again on this date we have to maintain the stock. So what's the earlier stock? As it is, we have to maintain the 65 215 plus you have to add on this date whatever the purchased on 20th February. Okay, so added 240, you need 240 quintals at the rate of 24.7375, and the rate amount is what 35,850. Okay, so next on 24th what's happened? On 24th issue 304 quintals. Okay, 304 quintals. Okay, so whatever the stock is there on 20th, okay, so whatever the stock is there on 20th, whatever the balance is there, out of this balance we have to issue 304 quintals. Okay, so take it 65 also. Okay, take it 65 issued at the rate of 25 1600. Next stock is what 200 stock, take it 200 also. Up to 304 you have to take the quintals. Okay, so 65 plus 200 from the second, from the third lot we have to take the 15 as it is. Okay, so still 24 is required, so take it 24 quintals from this last stock which is the 240. Okay, take it 24 quintals from this at the rate of 24.375. okay, 24 into 24.375, the amount will be the 583. Okay, so we issued 304 quintals on the 24th February. Okay, so again we have to maintain the balance. From this 240 we taken the 24. Okay, so this is the finished because we issued this. Okay, we transferred for the manufacture purpose. Okay, so it is the finished now. So remaining stock, just see 240 minus 24, the remaining stock is what 216 at the rate of 24.375. the amount is what 5265. Okay, so next what's next happened the next date on 25th received from vendor 320 quintals at rupees 24.315 quintals. Okay, so again it's a received. Okay, it's a receipt on 25th. Okay, so take it here 21st February 2013. so 320 received at the rate of 24.315. the amount is what 7,780. so as it is maintained earlier stock as well as this stock. Okay, so see here it is a maintained here. Now the next date what happened is something issued. Okay, so on 26th issue 112 quintals. Okay, so whatever stock is there out of that 112 we have to issue on 26. Okay, so first stock is what 216. from this 216 we have to take the 112. Okay, so 112 at the rate of 24.3315, the amount will be the 2723. Okay, so again we have to maintain the stock on this 16th February. so whatever the stock we taken and what's the remaining 104 quintals are remaining from this 216. Okay, so take it rate 24.375, the amount will be the 2535. Okay, so 320 as it is we have to take because it is the remaining, we are not taken from this stock. Okay, so next on 27 one adjustment is also there. Okay, so on adjustments here the on 27th another shortage of 8 quintals. Okay, so it is means what's the issued. Okay, so first of all take it the issued on 27th February 2013. It is the receipts, actually they are taken first the receipts. Okay, so in the problem receipts given on 27th refund of surplus from work order 12 quintals at rupees 24.50. Okay, so it means whatever the transfer the raw material for the manufacturing, from that it is transferred again to the stores. Okay, so given back to the stores how many units? 12 units. It means what it is the receipts 12 in 12 at the rate of 24.50, the amount will be the 294. Okay, so just see here again we have to maintain the day, again we have to maintain the balance on this date 27 to 2030. Okay, so as it is we have to maintain 104 320 plus this stock 12 new stock. Okay, so these are the now 3 lots are there. Okay, so first lot is 104. out of this 104 first of all we have to issue. Okay, then second slot, next third slot. Okay, so next on 27th it is shortage. Okay, so it means for the issued how many units? 8 units. Okay, so now 8 we have to take from this 104. Okay, 104 there is what shortage, so that's why they want to issue. Okay, so take it from this 104, take it 8 quintals 24.375 rate, and the total will be the amount is 195. Okay, again we have to maintain the stock on this 27. so 104 minus 8 remaining is a 96. So as it is the rate we have to write, and whatever the remaining next lots are there, as it is take here the 320 and 12. Okay, so on the next last date what happened, on 28th received from vendor 100 quintals at rupees 25. Okay, so see here again it's a receipts. Okay, on 28th February 2013, so 100 quintals are received at the rate of 25 and the amount will be the 2500. Okay, so make it balance. So whatever earlier date stock as it is we have to maintain, plus we have to add this new stock 100. Okay, 100 quintals. Okay, so this is the maintained in the last date. Okay, so this is the stock remaining in the month of Feb. Okay, so like this we have to solve the problem on the FIFO method. Okay, I hope all of you understand. If it is not understand, you can contact me. Okay, so definitely will be the understanding. So thank you.